Today we're talking about long-term rentals and why you should absolutely not be looking to buy them in 2024 because they do not work for any type of strategy in Colorado. Now, the first reason why long-term rentals do not work for single-family homes is because the price point of what you're going to be doing for 20% down is going to be at $100,000 to $120,000 for your down payment for a single-family home, because the median home price is going to be around $500, $600 range here in Colorado. Now, even if you did house hack it at first, you lived in the property and you did a low down payment, that amount of what your loan is going to be is still going to not make sense once you do move out of this property. In a year, definitely not. 2 to 3 years, it might be close, but you shouldn't be estimating what rents are going to be. You should be analyzing what the property is right now and not increasing those estimates. So as of right now, it would not be working for doing a house hack and then doing a long-term rental once you moved out of the property. The second reason is you're not going to be getting any type of good cash flow. You're hopefully going to get, a couple $100 a month, but after doing one maintenance issue, that's going to be wiped away very quickly if you don't have enough reserves that you're being set aside in order to make the property make sense. Ideally, you would want to have around 10-15% based off of what the property is looking like set aside for reserves. That would be maintenance, capex, and vacancy every single month. And oftentimes what I see is that even doing that high 15%, you're not even close to cash flowing on a property where it still makes sense, and you have to lower that dollar amount, and you're really just going to be looking at an appreciation play in the Colorado market unless you are doing 30-40% down payment, which is completely okay if that is what your strategy is. It may be you're doing a 1031 or you're moving a lot of cash from one property to the next, and you're okay and fine doing that. And maybe that makes sense for you if you are having to move capital over from doing a 1031 or whatever other situation you may be in, and having that higher down payment is perfectly okay because you'll still get the appreciation, the loan pay down, and a large amount of cash flow in that scenario. The third reason is that insurance costs are increasing dramatically. I have a fourplex and it almost doubled the price of my monthly insurance cost to almost $800 for the fourplex. And for long-term rentals that are on single-family homes, I'm seeing rates of around $300, even $400 for those types of properties. And so with crazy high hikes that have been increasing on insurance costs, you need to make sure you're calculating that into your analysis when you do purchase a property. And this is why it makes long-term rentals definitely not even work in 2024. Now let's analyze a single-family home to be used as a long-term rental here in Colorado Springs to give you a better idea of what is happening actually live in today's current market. Okay, the first thing you're going to want to do is you're going to pull up Zillow or whatever you use to look up searches, or however you find out a property. You're going to want to find a property. So first we're going to start in Colorado Springs, do everything for sale. We are going to look in the range of $350 to $450, just because these are the most likely ones I see that have a chance of cash flowing based on where the rents are and where the mortgage is going to end up being. We're going to want this to be as large as possible. Let's go 5 bedroom, 4 bedroom, 3 bath. We're going to hit only single family homes, deselect all houses. I like to avoid anywhere that's south of Interstate 24 and south of Platte. This area is a little bit of a hit or miss. So it can be some good neighborhoods and pockets. Right here, over in this section right here, I don't love it. And then right here on this side of Memorial Park and this section right here can be decent. This side right here is up and coming off of Castilla. I really like that area. And then up north, these are all going to be good areas. Up here, for the north you get, the more expensive it gets. So we're really going to be looking in kind of these pockets. And I do like all these sections right here. These are good spots. Anything that's north of Constitution, I really like for a location. So we're going to start with, let's look at this one. 4.3, 2,800. Doesn't look too bad. Built in 1979. Kitchen's okay. I don't like that flooring really, but not too bad. This is a weird space in the basement, so it's like a bar area, but it's not. It's a weird sink, but not too bad. Cabinets are not the best. Let's look at one more. Just gonna 4.3, 2,800. 444, almost 2200. Nice home. Kitchen is good, like how it's open. Nice appliances. Flooring's a lot better. Let's run the numbers on this one just to show you. So this is the one we're going to be using. Enter the address in right here. I already got it for you. It was a trick question. 449 is our purchase price. I typically estimate around 1.5% for your closing costs. We're going to be doing 20% down because it is going to be a pure investment property. If you do less, like 10% down, you do have to add PMI down at the bottom because bigger pockets won't automatically add it in. You'll probably be getting around a 6.5% rate for an investment property right now. If you're going to be doing a primary residence, you can probably get closer to 6 or even in the high 5s or mid 5s if you're doing a VA loan. 30 years rental income. I'm going to show you how I got this 2,500 number. You can use the rent estimator on Bigger Pockets, which I do really like, and it makes it very handy. We have a 4-bedroom, 4-bath, search address. They gave us an automatic estimate right off the bat, but you can also look at the other properties that they are seeing in the area. 2,800 for a 5.4. We got over here 2,600. 2,500, 2,600, 2,200, 2,300. So yeah, 2,500 seems about right. The other thing you're going to want to do is go back into Zillow, and we're going to want to switch it over to for rent properties and apply and look at the similar properties that are for rent in the area. We're not going to have a cap on this. We're going to go any price, and we see what is available for rent in our area as your competition is why I like to look on Zillow. And this one doesn't look too great. Bad photos. Yeah, not the best. Looks like it still could use a little bit of updating. It's not as nice as ours. Now we're going to go check out another one. There's another one as well. I think 2,600 right next to it. Yeah, look at this one. Nice yellow house. Nice views. It's furnished. This one seems like it's going to be a furnished home, which it's not. I don't like this. Homes like this that are furnished never end up getting snatched up, really, just because it's so much furniture and so much design. It's like people wouldn't feel comfortable living in a place like this, even for a short term. So photos aren't really great, but 2,600. Maybe that's why they're doing it so low, to try and get something. So, but let's see what else we got. 25, 25, 25. This one doesn't look bad. Yeah, not too bad. Another 25. 25. So yeah, 2,500 seems like a fair price that we can use for this. Where did it go? Here we go. 2,500. Property taxes you can find on Zillow. Once you have the property up, you can just click on it, scroll down. Let's see if we can get it back real quick. For sale, apply. Oh, where'd it go? Right there, that one. Oh yeah. So you scroll down, it'll say price history, tax history. Since it's kind of in the middle between 22 and 23, they actually went down. That's not always common, so I would prepare for that to go back up to around 1,400. Is why I use that as my estimate. I typically like to get insurance. This is at $2,500 annually. Typically for single family homes in Colorado Springs, I see it around $2,200 to $2,600. So we just went with $2,500 over the course of 1 year. I like to get 5.55% across the board for repairs, vacancy, and CapEx, and then adjust it as we go. We're going to be managing it ourselves as of right now, and then tenants are going to pay all the utilities. So let's run the numbers. Negative 470. Not good. I mean, say we did get a little bit more in rent, 26.25, and we bought it at 400. And say we get a little bit better rate, 6%. How's that look? Barely even breaks even. And that's getting the property down at 400, and they want 450 for it. And yeah, it doesn't really need any updates. So you're really just going to have to make offers and really get aggressive and kind of see what happens. You could cash flow $126 if you took off 5% of your 15% for reserves, which I'm not sure you want to do. It's built in 1982, so we'll definitely have some repairs that will be needed to be done. But yeah, that's what a long-term rental analyzed looks like in Colorado Springs. Now let's talk about some of the good things that you can get from having long-term rentals, provided the numbers do work when you do make that purchase. Oftentimes doing a larger property like a fourplex and even anything higher, probably 4 to 5 units, is more on the larger side of what you would see here in Colorado Springs. But out in Denver, you could definitely get into the 10, 15, 20 plus range for those larger multifamily units. The first thing we need to talk about is appreciation. Appreciation in Colorado is going to be a lot better than appreciation in the Midwest, because you would be getting 3% of a $500,000 property is going to be a lot more, plus that loan pay down that you're getting, compared to a property at $250,000 is going to be a lot smaller. And over the course of 30 years, if you think, okay, if I get no appreciation, just loan pay down, I'm going to get $500,000 property. And in the Midwest, I'm only going to get $250,000 in that same time period. So it's just going to be a numbers game of what you prefer, what you're looking for cash flow, what you're looking for appreciation, and where you are at in your portfolio of generating wealth, of generating income, and what your goals are going to be. The second benefit is it's going to be a lot easier to manage a 12-month long-term rental compared to a midterm furnished stay or a couple day short-term rental. Once you do the upfront work of finding a good quality tenant, they have signed a 12-month lease, and you make sure that they're just paying every single month, do a check-in every 6 months, you're going to be good to go, and it's going to be a lot easier than having to find tenants every couple of months, operating cleaners, guest bookings, maintenance, stuff that happen a ton on short-term rentals. So that's definitely going to be a lot easier aspect on a long-term rental. It's almost going to be just kind of set it and forget it. You will need to definitely check it out every now and then to make sure it's operating correctly. The third benefit is going to be that there will be less turnover. With furnished rentals, it's every month, every couple of days, you got to get cleaners in there. It's a lot more hassle, a lot more talking back and forth. There's a lot more chance for error to be had with so much turnover going on. But if you have a 12-month rental, a lot of times they'll just renew their lease at the end of that 12 months for another 12 months. And it could happen again and again. And, there may be rental increases in there to make them change their mind or they look to move. And even if they do, it happens once every 12 months where they do look to move out of your property and they go and you have to find a new tenant at that time. You will have to do the vetting process again for the next tenant, but it's a lot easier than you think. Simply reading a book or watching a couple videos on how to get it done is going to be the best thing to do when you're first starting out. Thanks for watching. Make sure to hit the subscribe button. And if you are local to Colorado Springs, come out to our real estate investor meetup. It's going to be the best way to meet other investors here in the area, as well as what strategies are working best for Colorado Springs. There's co-living, short-term rentals are some of my favorites right now, but there's also doing house hacking on long-term rentals, furnished rentals, and getting to some more unique stuff with commercial real estate as well. We'll see you there.